Hello everyone, how you doing? This is Dan and this is Dan Tech Channel. In this video we'll just be taking you through the forex trading introduction class, and be sure that after watching the whole of this video, then you are going to understand everything that you just need to get started on the forex trading. All you can just do is to make sure that you subscribe to the channel, turn on notification bell, and also like this video. So actually I'm just be explaining this forex trading in a very simple way that you can just understand, because I understand the way I was starting to trade on the forex and learning, there are some things that were very difficult for me to understand and all that. And in this video I'm going to make everything simple for you over here. I'm going to be writing over here. Make sure that you be having a notebook over there. If maybe you reach reach somewhere you don't understand, you can just pause the video and then you can just maybe write that point down, and hope you just be following this up to the head. So without further ado, we are just going to start with the introduction of what is forex trading, so you'll be understanding a lot as I said in this class. Number one, let's talk about what is forex trading. Now, what is forex trading? As the term just defines itself, forex trading, where does this word come from? Where does these ones come from? Maybe you can just understand the whole of this, so maybe when you just want to start. So when you talk about forex trading, we are talking about two terms over here, which is for and X. Okay, when we talk about for and X here, we are talking about the foreign. We are talking here about the foreign, and this is exchange. Okay, exchange. Okay, exchange. The other thing you can see over here is trading. Yeah, we talked about that. So foreign is something that comes from another country, and exchange is meaning that different countries are changing. So in terms of here, we are talking about the currency. So here means we exchange currencies. For example, if you have done maybe mathematics in primary school, high school, you have seen something about the foreign exchange calculations and the value of maybe dollar and all that. Those things, that is what we call foreign exchange. So forex trading actually is the foreign exchange. This is what banks do. This is what everyone does over here. So when you talk about the trading, this is just like business like any other. You have seen, for example, in maybe let's say that is Kitambo, or maybe long time people were trading something we called barter trade. Barter trade, I think it is barter trade. Yeah, so this is where people were exchanging goods with goods. People were exchanging goods with goods. That means someone could come with maybe that is with a sack of maybe the potatoes, and the other one comes with a sack of beans, and then they just exchange. This one gives this one, and this gives this one. So this is trading. Using these goods, you exchange with goods. So this is trading. This is trading. That's why it was called barter trading. But because now we are talking about currencies and all that, because of technology, because of development, now we don't exchange those ones. Now we exchange currencies. So up to now you have understood what is foreign exchange, what is forex trading. Now, but there are different things that you just have to be understanding over here. Let's say, for example, you want to exchange. What can you exchange over here? Okay, what are these foreign currencies? For example, we have GBP, which is defined GBP, which is defined as British pound. It is British pound. I'll just name maybe some of them, and maybe you just understand that. We have euro, which is euro. With this is just the European currency. We have USD, which is United States dollar. Okay, and more of them that we'll just be talking in this series. Now let's just proceed with the class by talking about these things that maybe you have to understand in this class. When we talk about forex trading, actually we are talking about different things. So there are types of trading. Actually, maybe you have encountered this anytime. Maybe you have been searching on the YouTube how to trade, and maybe you have seen so many people talking about this trend. So let's talk about types of trading. Types of trading. What are these types of trading that maybe you can just encounter there on the internet when you are trying to try to trade? And number one of it, we have what we call binary trading. We will come to that. This is binary trading. We have crypto trading. You have seen that. Those things are not supposed to be confusing you. That's why I'm bringing the difference. And finally, we have forex trading. So anytime you hear about forex trading, anytime you hear about trading, then just know we are talking about three things. These things over here, except for the scams. Because there are some people also who have scams, number 4 over here, and these scams is where people just tell you that give us amount of money and then we are just going to, that is trained for you, and then after maybe 24 hours we are going to return maybe 2 times of your money, or maybe 50%, something like that. So this is scam out of it. Just forget about that. Let's start with number 1. So I'm just going to name this A, B, and C. These are 3 things I'm going to discuss over here so that maybe you can understand more. And when we talk about the first one is binary trading. So let us talk about binary trading. I'm going to go brief on this because our topic today is forex trading, but I'm talking about this so that you can just avoid confusion. Okay. So when we talk about binary trading, as you can see right over here, the word binary means buy. If you just search maybe the word buy, this means twice. Okay, this means 2. Okay, so these 2 things, this buy means 2. Okay, so and when we talk about binary trading over here, we are talking, and actually when you just go maybe to the science and all that, those who maybe studying something about engineering in college, maybe there you have, or computer, maybe computer actually reads in binary form. So binary means in 2, and when we talk about binary, we are talking about zeros and ones. So you can see actually we have 2 options over here. So when we talk about the binary trading, we are talking about trading in 2 options. That maybe you have seen the platform that says you can that is entries. You have 2 entries over here, and actually you can just maybe trade in 2 ways. That is maybe when you predict whether the market is just going to go down or the market is going to go down or up. Okay, so you can just predict in 2 terms. Here indicate the market is just going to go down, and over here indicate the market is just going to go up. Over here you just be earning maybe 85% of your what you earned, and over here you lose 85 of maybe whatever the money you placed in. That's how things are. Okay, and this is binary trading. So you can see you just have 2 options over here. Either maybe you can see the graphs just going this way, and then you just decide to buy at this way because you know the market you just maybe in 1 hour, because this has limit in 1 minute. In 1 minute you say this is going to cross this and it is going to stay above, when before this minute it will just be at this point, and then when you just do that you'll be earning. So that you can see this is binary trading. It has time limit, it has this buy and sell. Most of them they have something we call, maybe you can just predict whether the last value, whether it's going to be owned or even whether the value maybe is just all those options. That has 2 options. That is what we call binary trading. And number B over here, let us talk about crypto trading. Okay, and actually before even we just go to that, let's see what platform can you use to trade on binary, because this is actually very risky platform for you to trade in. You can actually, all these brand, if anyone talks to you about platform called SPA option, yeah, as part option, I don't trade on these platforms because they are binary, very risky. If someone mentions about SPA option, if someone mention about tariff.com, if someone mentions about the all-in trend, all these are brokers. Okay, all-in trend, I'll talk about the broker later. And if someone talks about binary.com, So all these platforms are binary related, so all you can only trade binary. That means you have two options and you have time limit. That means the market, if maybe you trade in market to go down and the market keeps going up after 1 minute, when it ends, then you just lose money. So sometimes I can just relate this one to like something like betting. Okay, it's somehow something like betting. Okay, somehow it just brings something about betting. I'm talking about the binary trading. The way I've explained it, you have to know that just having two options is just like a win or draw, something like that. And that is what we call binary.com. What are disadvantages? Actually, we have so many disadvantages over here. This on the SPA option, it has disadvantage and advantages. Let me just mention it. Disadvantage number one, it's very risky. It is time limited. You know, you don't have the full time. Maybe when the time ends, then you just get out of the market. On this one, actually it has so many scams, so it is actually very hard even to make money on this. So what are the advantages of binary.com or this binary trading platform? They are very easy. That is the only thing. They are very easy to start, very easy to trade, and very easy to lose money. Don't forget about that, because even if you don't have the knowledge about the market, you can just go there and then click this one, and maybe the market can just go against you or to you to make just a profit. It's just like betting. You just go there and you can place the team, and maybe according to the way the horns, you see the horns, and then you can just win or lose the game. But you know, the chances of losing, they are always very high. And let's talk about the crypto number B, which is crypto trading. Okay, so we have crypto trading. So when we talk about crypto trading, here you see we have two terms. We have crypto, so the word crypto comes from the word cryptography. So you can see we have actually two options over here. We have crypto and we have graphy over here. So the word crypto, actually this is a virtual currency. When we talk about the virtual, here we are talking about something that you cannot touch, something that not touchable. Yeah, you see, like dollar, you can just go to the bank and withdraw it. You can just go maybe and touch Kenya shillings, euro. But crypto, you cannot go to the bank and withdraw this money and just get them into the hands. So about and the graph means this is actually the graph where you see something, not those candlesticks, these things. So it means it's just a virtual currency whose data is stored in a graph. And actually, when we talk about the cryptocurrency, we are talking about the market. We are talking about the market that is not controlled, that is not controlled by central authorities. There's the term I don't want to use here. So that means, for example, when you see the dollar is just maybe losing value and all that, you always see the Fed coming up and maybe try to increase the interest rate to maybe the to strengthen the dollar, or maybe yes, is inflation and all that, so that maybe they can just try to do up with crypto, that is US dollar. But when it comes to cryptocurrency, actually this is something for everyone. You know, crypto can just shoot from here to somewhere very big, and that is it. There's no one who controls this one. Okay, so it does not have a control unit, maybe where you are waiting maybe for someone to come and maybe say this crypto is just going, for example Bitcoin, you see the Bitcoin is just going very down, and then we just have to do all this and that and that. Okay, so it just is not we can use the term is not decentralized. It is not decentralized. That is the system. You can find it maybe on the internet to understand more about it. and that is crypto trading. If you just want to trade crypto, you can use the broker I'm going to show you over here. You can use FXPesa, that is to trade crypto through CFDs. Okay, and also if you just maybe want to trade all the cryptos, we have BTC, we have Ethereum, we have USDT, we have so many of them. And if you just maybe want to concentrate on crypto trading, you can use something like Binance Exchange. You know, we have Binance Exchange, we have it's called Obi, and there are so many crypto exchange platforms that you can just find on the internet. It's only that maybe if you just want to concentrate, you can just use Binance, that is to trade. That is the broker that is mostly known. But talking about the crypto, there are also disadvantages of crypto trading. That is what you just have to understand. When we talk about the cryptocurrency, you can see it is decentralized. That means, you know, these rich people, what they do actually is they come and put their billions of money over there, and actually they buy maybe a lot of Bitcoin, and then Bitcoin start shooting again. You can be having a very good strategy. You will see that, because when you are trading, you have to have a strategy, you have to analyze the market. So you can just be having a very good analysis, but actually when these guys come, they buy maybe a lot of Bitcoin, and then the Bitcoin actually will start going up very fast, and maybe your indicators and everything that you used, it was saying the market is just going to go down. But you can see these people, what they will do, they will just manipulate the market. The other thing that I just noticed is that this one, because they are made by those companies and people, some of them you see some may even go to zero, and then you can end up losing everything. Not because this can just maybe you can see one of the coin can just be going maybe at $100 maybe today, but in the next day maybe this can just go to 0.0000, and then it get closed, and then maybe you invested maybe $1,000, maybe the next day you meet that you'll be having zero account, everything was just wiped out. And when we talk about what else, and advantage is that you can just buy this one at maybe $100, and maybe the next year you may turn out to be $1,000, because that is how the crypto can be, sometimes predictable, sometimes not predictable. Let's talk about the main topic over here today, which is now the forex trading. So forex trading is what we are discussing over here. So I was talking about that because you can understand now what is the difference. So this is number C, forex trading, and this is where we are just going to concentrate on. So when we talk about forex trading, remember what we said in the first time: foreign exchange, where you can exchange different currencies. You can use GBP, Euro, USD, Australian dollar, and all that. But not only that, what can you trade on the forex trading? On forex trading, you can trade something like this. Let me just name this. Hi, on forex trading, what can you trade? On the forex trading? You can trade what we call currencies. You can trade currencies, and these currencies are maybe what we are talking about: Euro, USD, that is United States dollar. We can trade AUD, Australian dollar. We can trade ACAD, that is Canadian dollar, and so many of them. Okay, and the other thing that we can just talk about over here, number 2, is agricultural product. You can trade them on the forex. Agricultural product, you can trade on the forex trading. On the agricultural product over here, you can trade cotton, you can trade sugar. Imagine, you can trade sugar, you can trade cotton over here. Number 3, you can trade metals. Imagine, you can trade metals over here. So you have so many options. Okay, you have so many options to trade. You can trade silver, you can trade what we call gold. all these you can trade them on the forex trading according to the broker. Number 4, this is number 4. Okay, number 4 here, what can you trade over here? You can trade energy. You can trade energy over here. We are talking about the crude oil. Crude oil involved, that is US oil. Okay, US oil. You can trade UK oil. All these are the crude oil. Okay, you can trade also gasoline over here. I'm just giving 2 examples. Okay, number 5, you can trade stocks. See, there are a lot of things that you can trade on the forex trading. You can trade stocks. Stocks over here involves, maybe you can trade Netflix, you can trade Adidas, I'm talking Adidas because of ongoing that is March, that is World Cup. This is 2022. Okay, you can trade, that is, you can trade a lot of things, Facebook, everything over here in stocks. You can just trade them over here, including Tesla. So those, all of them are stocks. Our number 6 over here, you can trade indices. So we'll be talking more about the indices later, and why are you to trade indices, why indices, and all that. You learn more about the indices because these actually they inspire and all that. So I don't want to talk more about the indices. If you have 5 of them, then this is what you can trade on the forex trading, and it sounds very amazing. So you have so many options to be trading right over here. So it's just your choice to choose what do you want to trade on the forex trading right over here. So we have come to the end of the part 1. Make sure on the next, what we are just going to be talking about actually is the forex trading class over here, and we can just proceed from there. What do you have to know about the forex trading advantages and the broker that you can just be using to trade on the forex market? I'll see you in the next class. Make sure that you watch, subscribe to the channel, like this video. I'm coming right after this. Hello traders, how are you doing? Welcome back again. This is Dan and this is Dan Tech Channel. If this is your first time to be over here, this is part 2 of introduction to the forex trading. You can check our previous class. It is just down one over here in the description, or you can just get in the comment section and all that. So in this video, we'll just be talking about the forex trading now, so that we can just know what are the advantages, and actually a lot of things that you're just going to know in this video. It is just going to be very amazing. So this is part 2. Make sure that you watch to the end. It's going to be very amazing. Like this video, subscribe to the channel, and be notified anytime I just upload a new video, part 3 and all that. It is just very amazing. I'm going to explain in a very simple way that you can just understand. Even if maybe you have never traded, you have never heard of forex trading, just follow my class and it's very going to be simple for you. Forex trading over here. So actually, do you know forex trading? When you talk about the forex trading, this is actually where the companies, bank, hedge fund, investors, and also the retailers come in order for exchange of the currencies. And also you might have actually done the forex trading, but you don't know. Why am I saying so? Maybe somewhere you traveled, maybe let's say you travel from maybe that is from US. Let me use these countries. You travel from US and maybe you just went you went to Australia. You just went to Australia over here. You travel from US and you went to Australia. You went to Australia. So what you will do over here, for you to move to US, to move to Australia, what you do, you have to pass through the bank over here. You do something we call foreign exchange. You being given an Australian dollar, you give AUD over here, and then you just come over here with AUD, and vice versa. When you're just going back the AUD that you just be having over here, you exchange them over here to get the US dollars that you can maybe get back to your country. So you have already done what is called forex trading. Because of today you have traded the foreign currencies. Okay, now when we come over there and we just talk about something like this, you come from US and you are going to that is Australia. Okay, you are just going to Australia. So over here we have Australian dollar, that is you want over here AUD, and we have US dollars. That means you just be buying this, you buy this one. Okay, so you buy USD, you use USD to buy this one. Okay, so all this one is what we call a pair. We'll be talking more about the pairs and how those one, but that is how you have to understand it. You have be this, so that is how things are done. So you already did a forex trading through this pair. So you have already done what? A forex trading. You already traded on the forex trading. Now, what are the advantages of forex trading? What are advantages of forex trading? Because actually, well, we are talking about the advantages of other platforms, and let's just talk about what are advantages of forex trading. And actually, this is going to be very fascinating, because when you talk about forex trading, we are talking about the market, very big market that is trending more than $3 trillion every day, not every month, not every year. Okay, every day. Actually, for those in Africa, country in Kenya, you know, this is our budget, not dollars, in Kenya shillings. Actually, is 3 million Kenya shillings is our budget in the whole here, but in the forex market it is trending $3 trillion every day. And why are we talking about this one? This market is very liquid. It's very liquid. That means you can have many opportunities to trade. You can have easy to get in and out of the market, because market is moving so well. Can you imagine if you just go to the market where everything is just constant, just moving very slow? Can you just imagine in another market where you can just go and sell, buy fast, sell fast? You end up actually making a lot of profit on that. So that is how the forex market is, and if you just want to involve it, then you can just, you have chances of making more money. Let's talk about another one over here, which is the EC. This is ease of access. You can access the forex trading, that is very easily. Actually, the way I'm going to show you access, and actually you can trade even with small amount. All this is dependent with the type of the broker that you just be using. We'll be talking about the requirement that you just need to start trading on the forex trading in this video. Just keep watching. Okay, and the other advantage we see on the forex trading over here is the volatile allows traders to benefit from the market. The market is volatile, that means it's moving very fast. Maybe the market can just go over here, it hit your stop loss, is take profit, it takes the profit, you sell again, market goes over here. Maybe in a day you can make so many trades, closing, opening, closing, and then you just make small amount of money, and they can just end to be a very big amount of money in a day. The market is volatile. Okay, and the other thing that is very interesting about the forex trading is that you can trade forex anywhere. Okay, you have freedom to trade anywhere. Okay, for example, there are some people who maybe live in town, you have been trading forex in town, and maybe you're just planning to go to Sharks and maybe downtown or there, and then what you just have maybe is to carry your phone or maybe a laptop, and then you just need some internet, and off there you just go and maybe carry your business over there, and you can trade anywhere. You can just go to a vacation and then you still continue working. You can go anywhere in another country and still you continue working. You know, if you're a full-time forex trader, you can work from. You can see this job is business is very nice when you're starting and all that. That means you can, everybody, actually this is what you find. For me, I love working anywhere without any restriction, without maybe saying I have to stay here because of one reason or the other, because maybe of the job. But forex trading is something different. You work anywhere you just want and all that. The next step that is very important over here is that what do you need? What do you need? What do you need to start forex trading? What do you need to start forex trading? To start trading, what do you need to start trading? That is important thing that you have to note over here. What do you need to start trading on the forex market? When we talk about this, actually this is very important because you have to know this. And number one of what you just need over here is broker. What you need over here is the broker. Over here, when we talk about the broker, let's say you have decided to do forex trading, which I do actually. So if you just want to do about the forex trading, a broker, actually this is a platform that you will be using to deposit, to provide you with the video that is currencies, metals, energy, and agricultural product to trade. And when you just trade and get profit, then you can just withdraw your money. And I'm talking about the M-Pesa. Okay, you can just download up to the M-Pesa. In this case, we use the broker FX Pesa. I will just tell you why. Why are we saying that we are going to use FX Pesa in this scenario? So the FX Pesa, the link is in the description. Make sure that you click that. If you use that link to register to FX Pesa, my number, I'll leave it over there, and then you can just contact me and I'll hand you to my team so that you can just continue receiving free classes and all that. Okay, so forex trading, you use FX Pesa. How do you log into the, let's first of all talk about what you have to look on the broker before opening an account with the broker. Number one, you have to look whether the platform is regulated. For example, here in Kenya, the market has to be regulated, the platform has to be regulated by CMA, which is Capital Market Authority in Kenya. This deals with all things about the market. It's just like caps, you know, something like that. So this is for the market. So it has to be regulated by this one platform. That is to be assessed, everything, okay? So that to ensure that when your capital is just deposited into this platform, the platform is not going, or FXPS is not going to use your money to trade or do a business. Your money is just going to be kept away from the company money, and that means you can just withdraw anytime you want of the money. And actually, the thing about the FX Pesa, let's just continue with the what you have to look, and then I'll just be talking about that one. Number B is the easy access. Easy access. The reason about is that you can, after registration of the link in the down one below, the reason I'm saying that you use my link down over there is so that you can just getting the real link, okay? Because maybe you avoid being scammed maybe by the scammers out there. So easy access, you after registering over here, you can just download the application on the Play Store. You'll be accessing it in a very easy way. The other thing is that for easy access, it's very easy to deposit money because you deposit right from FX Pesa, from M-Pesa. Deposit M-Pesa here. You know, M-Pesa is very common and very easy for everyone. So deposit, very easy. You can deposit and trade from $5. Just imagine. And also you can just withdraw as from $1. So that sounds very, very, very amazing. So the other thing we just be talking about over here is the low spreads. So look at the platform that has low spreads. We will be talking to see what are spreads. So these spreads are the charges that you need to incur when you are placing or opening a position. When you just trade, when you place a trade or buy something, they will charge you something. So you have to look up the platform that charges you very small amount of money, and you see that also in the FX Pesa. That's why I want you to access the FX Pesa, so that is a platform I know I've been trending for long. So that is platform you have to know that. So talking about number 4, we have to know about the customer service. customer service. So when you talk about the customer service, let's say you have a problem, maybe you want to access the platform and all that, you have any chances, you have anything to ask, of course the customer service has to be there. So that is, you don't have maybe to go and struggle to do something. Customer service has to be there to help you and all that. So when you open an account with the FXPesa, what that does is that it just give you an account manager. Account manager is someone you are signed in to be helping you in everything that you just need. If you have any question, you just be contacting directly. That is only person you just be assigned in to be helping you over here. If you just want to access the support team, you can contact support at fxpesa.com. So here, okay, so that is what we are just talking about over here. Number here, which is the last one, you have platform has to be very secure, and over here I talked about the CMA, security has to be tight. So when you are registering, actually for those who will be using the link in the description below, make sure when you register, your ID that you registered with matches with the number. If you registered a Safaricom number over here and that Safaricom number is registered with your ID, make sure that the time you will be uploading ID for verification, you use the same ID. If these two will not match, you will not be able to withdraw or deposit to this account, because let's say you register, all you have to do, register, this is your ID, this is your phone number. So make sure the number you have used over here is the number you registered with the ID you are going to upload, okay? So that if anyone, maybe even if someone hacks your account, there's no one can withdraw your money, because the money only can only be withdrawn to the account that it just deposited from, okay? If you deposited money from to FXPesa using this line, you deposited to FXPesa, okay? So this is deposit. If you want to withdraw the money, you can only withdraw to this number. Even if I access your account, even if someone accesses your FXPesa, he cannot withdraw to his phone number. The money can only come to your account. So that is very high and very nice strategy to ensure that your money is very, very secure, okay? That's very interesting on what you just need to that is to start in forex trading. So we were on the first one, which is the broker, as you can see, number one here. So let's just go to the number two. Number two, on what you just need to on the forex trading, actually you just need you need a phone, you need a phone or laptop, to do all those things. Actually, you cannot just do, you need actually a phone, and maybe if you just want to advance thing, you want to become a very serious trader, you have understood everything, then maybe you can just get access of laptops. So maybe you can just be doing analysis over there, and over here you just need internet, or maybe Wi-Fi is good and all that, okay? So that maybe you can be fast. If you just want to be a scalper or someone who maybe execute trade fast, you enter, you exit, you need a strong Wi-Fi so that you can just be seeing everything how it is just going, or maybe you can just be making fast decisions when you are closing or opening the positions. That's why you need one of these things, but you need either a phone. Ukiwa na simu uko sawa. So if you have a phone or laptop, any of them can just work. Open an account with FXPesa and everything will just be very easy for you. And the other thing you just need over here is actually the capital, okay? Number three, which is capital. And this capital actually comes after maybe you have traded with the FXPesa and you have traded actually on the demo account. Sorry, you have traded on the demo. After trading on the demo, then you maybe after familiarizing with the market, how things are done, then that is the time you can just open the live account, and that live account is just going to help you to execute the trade, make profit over there, and then you can just withdraw your money. Okay, so on the capital sign over here, as I was just saying, make sure you just do on the demo first, but make sure when you are opening the FX account, open demo using that link, and then after opening demo again on the same time, go and open live account. So you'll be having live and demo account. You don't need to deposit on the live account, but let it be there, so that anytime you just want to trend, it will just be very easy for you. So and also you just be having the demo account. Okay, now let's talk about this last thing in this video. How is the forex trading done and all that? So for you to trade forex trading, you need a broker. Over here, let me write FX Pesa here. So let's FX Pesa is here. You have opened the account. So after opening the account, what you just need, let's say maybe you have traded on the demo account and now you are ready to deposit the money. So what you just do over here is deposit money. Deposit. So this is M-Pesa. Why am I writing these things? So this is M-Pesa, your phone. You have deposited into the FX Pesa. Maybe let's say it is $50 right over here. And after doing that, then you connect your FX Pesa. You link with what? You can link it to those things. We have FX Pesa Trader, we have MT4, and we have MT5. So you just link these two. So this platform, what they does is that they help you to execute the trend. Okay, so you have seen some platform maybe where you people are doing analysis, they are doing something on the graphs and they are drawing. So these are the platform that can just help you to do that on MT4, MT5, and the FX Pesa Trader. That is why you can just do the decision after your account is linked. So after making the money, after maybe you have executed the trend over here, the profit that you just make, of course, will just be reflected over here. And after making so, the profit will just be reflected over here. Any amount of money that reflect on MT4 and MT5 is also reflecting on FX Pesa account. So this is your FX Pesa account. So after making the profit on that, what do? You withdraw. So this is M-Pesa. So again, you can just withdraw your M-Pesa to your M-Pesa again. So this is withdraw. So you can see how forex trading is very easy. You deposit from M-Pesa to FX Pesa. You link your FX Pesa to FX Pesa Trader MT4. Actually, you can link even without even depositing first. You can just link it to, because even if you have demo, you can link it to MT4 and MT5. When you are registering to FX Pesa, you can select whether you want to MT4 or MT5. You can see that, and then after that you make profit. Then you just withdraw to your M-Pesa, and then you just enjoy the profit right from there. So that's how the forex trading is just very easy. You can just navigate on that, and then everything just becomes easy for you. So we have come to the end of part 2. That is what we have to know about the forex trading. In the next video, we'll just be talking about the forex terminologies that you just have to know, or forex basis that you have to know, or maybe some of them that you have heard people talking about on the forex trading. So make sure that you subscribe to the channel, turn on notification bell. You'll be notified anytime I just upload a new video, and I'll see you in the next one. Hello traders, hello everyone, this is Dan and this is Dan Tech Channel. On our last class we were talking about that is the forex trading. Actually, this is the continuous of what we were talking in part 2. This is part 3 of the forex trading. In this video we are just going to be talking about the forex terminologies, basics of the forex trading. So if you have not checked the previous class where we have done part 1, introduction to the forex trading, that is forex trading and all that one, make sure that you just check that one. And this class we'll be talking about the basic terminologies that you maybe have heard on the forex trading, and then we can just proceed from there. This is going to be very interesting, very simple for everyone to understand. It does not matter maybe this is your first time to be trading, it will just be very easy for you. Let's start now the forex terminologies. I hope you have subscribed, I hope you liked this video, and share also to your friends. Now, basic terminologies of forex trading. Basic terminologies. You know, when you talk about terminologies, when you talk about the forex trading, this means that maybe these are the things maybe that you have heard people talking in forex trading, and these are traders. Maybe you can hear people talking about something and then you just get confused, you know, you don't know what they mean. That is what we actually going to be talking about in this video to make everything that is simple. Now, let's number one over here, what we're just going to be talking about over here. Number one, maybe you have heard about the that is exchange rate. When we talk about the exchange rate, I hope if you checked the previous video, because I'll be using the one we used in the previous videos, make sure that you check that first. The link is in description and also in the comment section. So when we talk about the exchange rate, when we talk about the exchange rate, we are talking about the value of the currency expressed in terms of another. E.g., for example, let's say we have euro USD. So this is what? This is pair. So when we have this one, you can see something written like 1.0300. okay, so this is the exchange rate. What does this mean? That means for you to buy 1 euro, for you to buy 1 euro, you need how many dollars? You need 1.0300. So for you to buy 1 euro, you need how many dollars? You need 1.0333. okay, so that's interesting. That means what? The value of euro is very high because you need more dollars to buy 1 euro over here. So the euro is higher than dollar. So that is what we mean over here. And what we called this in the last class, we called this a pair, and we called this what, which we come to that. So this already a pair, this is the exchange rate. Okay, yeah, we talk about the exchange and all that. Now, the number two we are just going to be talking about over here is what we call a pip. So this is a common one. Actually, you have seen people talking about the pips and all that. So the pips actually means the smallest increment of the price movement on a currency move. So for example, there's something we call pips, and we'll learn later how to calculate pips and point, but there's something we call pips and point. Okay, let's, for example, you may use this one. We have this euro USD right over here. This is pair, and for example, the market moves from 1.0300, and then the market just go to 1.0310. So if actually you can see the market has ended, you will see the last digit over here. The market has just ended these two, and they come to be 10. So if you just subtract, you see you have that does not point, because the market actually does not count the last value. So you don't count the last value, so you have 1 pip. But in terms of point, you just need to know about the point. Just put this, if you subtract this one, we'll have how many points? We have 10 points. So these are the point, if you just know how to calculate that one. So the point is just you subtract this one from the previous to the last one. It's just like calculating the profit and the loss. You just subtract between the initial and the last. Okay, the initial and the last one, then you just get the point. Okay, so here we have initial and the last digit, then we get what? Then we just get the point. For you actually to get the pips is very easy, and I don't want to talk about micro, nano and what people have been talking previously, but here we just want to get pips. Just multiply this times 0.1. okay, so if we have 10, that means the price moved by 1 pip, because we don't count the last digit. So the market moves by 1 pip. So for any value where you see people talking about pips, if person talks about maybe 20 pips, just know the market moved by how many points. The market moved times 10, so you multiply this times 10 to become points, so moved by 200 pips. So this is, you multiply 200 pips times to get point. Actually these are point moved by 200 point. So if you have 200 point and you just want to get pips, you multiply times 0.1 as I said, and then you get 20 pips. So if you just want to get point, you multiply pips times 0. No, you multiply times 10. If you have pips and you have point, you multiply times 0.1 to get pips. So that is what you can just know for now, okay? But we'll come to that, how to calculate profit and loss. So if you just get that one, and you can get point by subtracting the digits from another, that will just be very easy, because if you just get point, then everything will just be very easy for you. The other thing that you just be talking about over here is leverage, number C, which is leverage. Leverage is the one that is very important in this video. The reason we are talking about the leverage actually means that this is the ability to gear your account into a position greater than your total account margin. Okay, let's say for example you get a leverage of 1:100, so that is the leverage that you can just get. But understand that the more the leverage, the higher the risk. Why am I saying that? If you get a platform, or maybe you adjust your leverage maybe 1:1000, that means you are saying that if I have $100 over here, I'll not explain this more, but this will just help you to understand. So if you have $100 over here, you are saying, if you just place this one, you are saying I'm able to handle, that is 1000 times 100, I am able to handle $100 in a trade. Understand, you make more money, but to lose this money will just be very fast. So if you use a leverage of 1:100, here you are saying multiply this 100 times 100. Here you are saying I can handle 10,000 in trading. $10,000 in trading, that is 1 million right over here. So that is the what leverage means. Okay, so let me talk about this one. This is very important. You know, before people have been trading, before we know about the trading and all that, kitambo sana, those who actually it just used for the banks used to trade against banks. You know, I'm going to explain the existence of leverage. Banks used to trade against banks, and when you talk about the banks actually trading against banks, central banks, and all those banks, you understand that there's a huge amount of money that is needed over here for you to trade over here at the forex market. Okay, so but as the time goes, it just involved something that we call the hedge fund. You know, hedge fund involved. So the hedge fund just came into the market. So hedge funds over here means that this is where people can just accumulate their money. So many people can just, this is investors, they come and they put their money over here, and then just putting their money into a pool, and then they can just maybe employ some serious or maybe big traders over here to trade for them. So this is a trading firm. So when these people get this amount of money, maybe they just trade. So that is what they are called the hedge fund. So they will just be trading for all those people. So you can see the banks who are trading against banks, but now the hedge fund just came in, and now we came up to the local banks where they can trade, the local banks and get involved. Until now, where we can just, my point is over here is until the market came to retail. So we are retail, so we have also investors. Retail means this is where the platform like FXPesa can just provide you with something called leverage. So because you need a lot of money to trade in the forex market, but you know, the forex moves in a small amount of money. For example, let's say 0.0300. So you can see these digits are very small. and you cannot say that you just enter into the forex market maybe to buy this small amount of money over here. You know, you need a lot of money for you to make profit out of those digits. So that's why you need to get something. Maybe if you have $10, you can see you cannot maybe if this movement you buy for this is $1 over here, you're just making zeros of amount of money. But through the leverage over here, it will just be helping you to actually be making good amount of money over here. Okay, and something we call the lot size and all that. So you can see that is where the leverage just involved in, so that maybe this with the smallest amount of money, with the small amount of money, you can trade in a big position, you can handle big amount of money. So it's like the platform will just calculate your money and just help you. You'll be, of course you cannot see that money, but in real sense the money, the leverage you place, the system will just be assuming now you are trading with that amount of money, and that's how the risk it is. The higher the risk, the big, it can just be an advantage. But if you have knowledge, just see that one. So that is what we call leverage. We'll just be explaining more as we proceed. Let's go to the last one, which is not the last one. On this one we're talking about the margin. Okay, and actually before even we just move to the margin, how do you calculate the leverage? So to calculate the leverage is just very easy. Just get the value, the total, get total value of open position, just get the total value of open position, then you divide by margin balance. Then you just keep getting what? The leverage. You just be getting the leverage that you have used over there. And then last not last, okay, margin is our next topic over here. Margin. So there's margin percentage. I'll just be explaining when we come to MT4. You understand very, very clearly. But these are the terms maybe that you'll be hearing people talking about. So the margin over here just involve, this is the deposit required to open or maintain a position. When you place a trend, for example, you have a running trend of Euro USD, so you need a certain amount of money to open that position. You need amount of money to place that trade. So that is what we call the margin, okay, or to maintain a position. If the margin is very low, that means the platform will close your position automatically. That means your account will be blown. Okay, so you need a certain amount of money. Margin, you know, margin it means something inside here, so the amount of money needed. So that is what we call margin is needed. And the last one we talk about over here, of course, we come to others, but we are talking about the spread. Okay, spread, actually this is the difference between the quote price and that is the bid and ask price. Okay, so you have seen maybe the platform talking about, maybe that is a Euro USD, talking about, I'm using this value, let me use this value, allow me to use it again and again. So we have 0.3000, and maybe you have seen this price, another price written over here. So these different two prices over here, so you have seen maybe when you are going to trend, the one is here and the one is here. So this one is what we call the difference between the buy quote and the sell quote. Okay, so those are the difference. That means if you subtract between this and this, you get 22 points. Okay, so this 22 points are the one that you have to pay when you place a trade. Okay, so for example, let's say you buy. Okay, when you buy in this market, the market will start from here instead of here, so it will pick from here, but the market will just pick from here, but it takes this one, so you have to pay 22 points. You just understand that. So you have to, if you just calculate the difference over here, you just get 22 points over here. So those are what we call the spread. So the other than that we just be talking about over here is the major currencies that are trending in forex trading. So these are the major currencies that are trending in the forex market. main trading in the forex market. Number one, we have euro. We have euro denoted as euro. So this is a European currency. We have JPY. We have so many of them. This is Japanese yen. Japanese. There's something that making me to write them down so that you can just understand. We have GBP. This is British pound. We have something like CAD, that is Canadian dollar. Maybe you know those things, you can just go through all them. We have NZD. This is New Zealand. This is New Zealand dollar, and many of them. This is CHF. This is Swiss franc. Okay, I know the way it's just written, maybe it does not sound that way. So we have these pairs and how they are just named. So these pairs actually are named, and maybe you'll be hearing those pairs named that way. So we have these pairs. So these are pairs and the nicknames pairs. So we have a pair just like this, written this way. We have this pair. This is known as euro. This pair, if someone tell you, hey, what are you trading? I trade euro. Okay, so he's trading euro USD, because actually, yeah, so that's in strategy. If someone trades something like USD JPY, that person is saying, I trade dollar yen. Okay, I trade dollar yen. So that is the language of the forex. I trade dollar yen. Okay, all right. So if someone actually trained GBP USD, that person will just say, I trained cable, or I trained sterling. So it means he's trading GBP USD. So if someone actually trains that is New Zealand dollar, that is NZD, and then versus USD, that person will be saying, I trade Kiwi. Hey, I do handle this one. So that is the Kiwi. Okay, so if someone trained maybe US dollar versus Swiss franc, that person will say he trained was guess he trained Swiss. Okay, he trained Swiss. So those are the terms maybe you can just be hearing in the forex market, and it just sounds amazing. So talking about pairs, name of the pairs. Okay, name of pair. How naming of the pair happens? Actually, this is naming of pairs. Okay, so for example, we have euro USD here. We have euro USD. You'll see something written like this, and maybe the value over here. I'm going now to explain this the last time so that you can just get these things clearly now. Okay, so we have dot here and 0300. Okay, now let's talk about this one. So this one is the base currency. It is base because actually you can see it is on the base, it is on the bottom, it is on the first one. So this is the base, the start, and this is the quote. Why are we calling it quote? Because if you just want to buy the euro, you quote, you say want to buy in terms of dollar, and buy with $2, $1, 1.0, so that is the quote currency. So this is the quote, this is the base currency, and this is exchange rate. Okay, you know this, we talked about it, exchange rate. So this is very important. This value is always 1. Okay, so as we said, remember what we said earlier, we said you need $1.0300 to buy 1 euro. So the base currency is always 1. So you need 1.00300 to buy 1 euro. That means the euro is expensive, because 1 euro, if you have 1 euro, you have 1.0300 dollars. So when you buy, you are doing what? You are buying you are buying euro. Okay, when you are selling, you are doing what? You are selling USD. Okay, so it's just like inverse of that. So if you buy, you are buying euro. If you sell, you are selling USD. So that's how easy things are actually in the forex market. So in the next video, we'll just be talking about the long and short, that is buying and selling. You'll just understand more about them, and also how to calculate point, how to calculate loss before you enter into the market. So that has been the part 3 of this video. We'll be coming with part 4 so that you can just understand everything about the forex trading, and this is going to be very, very easy. If you love this video, make sure that you subscribe down over there, and also like this video, share to your friends. It will just be very amazing. If you just want to know the broker I use, click the link in the description below to join FX Pesa, follow instructions. And if you just need more guidance, WhatsApp me. My number is down one over there. I'll see you in the next one. Hello traders, hello everyone, this is Dan and this is Dan Tech Channel. On our last class we were talking about that is the forex trading. Actually this is the continuous of what we were talking in part 2. This is part 3 of the forex trading. In this video we are just going to be talking about the forex terminologies, basics of the forex trading. So if you have not checked the previous class where we have done part 1, introduction to the forex trading, that is forex trading and all that one, make sure that you just check that one. And this class we'll be talking about the basic terminologies that you maybe have hand on the forex trading, and then we can just proceed from there. This is going to be very interesting, very simple for everyone to understand. It does not matter, maybe this is your first time to be trading, it will just be very, very easy for you. Let's start now the forex terminologies. I hope you have subscribed. I hope you liked this video and share also to your friends. Now, basic terminologies of forex trading. Basic terminologies. You know, when you talk about terminologies, when you talk about the forex trading, this means that maybe these are the things maybe that you have heard people talking in forex trading, and these are traders. Maybe you can hear people talking about something and then you just get confused, you know, you don't know what they mean. That is what we actually going to be talking about in this video to make everything that is simple. Now, let's number 1 over here, what we're just going to be talking about over here. Number 1, maybe you have heard about the that is exchange rate. When we talk about the exchange rate, I hope if you checked the previous video, because I'll be using the one we used in the previous videos, make sure that you check that first. The link is in description and also in the comment section. So when we talk about the exchange rate, we are talking about the value of the currency expressed in terms of another. E.g., for example, let's say we have euro USD. So this is what? This is pair. So when we have this one, you can see something written like 1.0300. okay, so this is the exchange rate. What does this mean? That means for you to buy 1 euro, you need how many dollars? You need 1.0300. So for you to buy 1 euro, you need how many dollars? You need 1.0333. okay, so that's interesting. That means what? The value of euro is very high, because you need more dollars to buy 1 euro over here. So the euro is higher than dollar. So that is what we mean over here. And what we called this in the last class, we called this a pair, and we called this what, which we come to that. So this already a pair, this is the exchange rate. Okay, yeah, we talk about the exchange and all that. Now the number 2 we are just going to be talking about over here is what we call a pip. So this is a common one. Actually, you have seen people talking about the pips and all that. So the pips actually means the smallest increment of the price movement on a currency move. So for example, there's something we call pips, and we'll learn later how to calculate pips and point, but there's something we call pips and point. Okay, let's, for example, you may use this one. We have this euro USD right over here. This is pair, and for example, the market moves from 1.0300, and then the market just go to 1.0310. So if actually you can see the market has ended, you will see the last digit over here. The market has just ended these two, and they come to be 10. So if you just subtract, you see you have that does not point, because the market actually does not count the last value. So you don't count the last value, so you have 1 pip. But in terms of point, you just need to know about the point. Just put this, if you subtract this one, we'll have how many points? We have 10 points. So these are the point, if you just know how to calculate that one. So the point is just you subtract this one from the previous to the last one. It's just like calculating the profit and the loss. You just subtract between the initial and the last. Okay, the initial and the last one, then you just get the point. Okay, so here we have initial and the last digit, then we get what? Then we just get the point. For you actually to get the pips is very easy, and I don't want to talk about micro, nano and what people have been talking previously, but here we just want to get pips. Just multiply this times 0.1. okay, so if we have 10, that means the price moved by 1 pip, because we don't count the last digit. So the market moves by 1 pip. So for any value where you see people talking about pips, if person talks about maybe 20 pips, just know the market moved by how many points? The market moved times 10. So you multiply this times 10 to become points. So moved by 200 pips. So this is, you multiply 200 pips times to get point. Actually these are point, moved by 200 point. So if you have 200 point and you just want to get pips, you multiply times 0.1 as I said, and then you get 20 pips. So if you just want to get point, you multiply pips times 0. No, you multiply times 10. If you have pips and you have point, you multiply times 0.1 to get pips. So that is what you can just do for now. Okay, but we'll come to that, how to calculate profit and loss. So if you just get that one, and you can get point by subtracting the digits from another, that will just be very easy, because if you just get point, then everything will just be very easy for you. The other thing that you just be talking about over here is leverage, number C, which is leverage. Leverage is the one that is very important in this video. The reason we are talking about the leverage actually means that this is the ability to gear your account into a position greater than your total account margin. Okay, let's say for example you get a leverage of 1:100. So that is the leverage that you can just get. But understand that the more the leverage, the higher the risk. Why am I saying that? If you get a platform, or maybe you adjust your leverage maybe 1:1000, that means you are saying that if I have $100 over here, I'll not explain this more, but this will just help you to understand. So if you have $100 over here, you are saying, if you just place this one, you are saying I'm able to handle, that is 1000 times 100, I am able to handle $100 in a trade. Understand, you make more money, but to lose this money will just be very fast. So if you use a leverage of 1 is equal to 100, here you are saying multiply this 100 times 100. Here you are saying I can handle 10,000 in trading. $10,000 in trading, that is 1 million right over here. So that is the what leverage means. Okay, so let me talk about this one. This is very important. You know, before people have been trading, before we know about the trading and all that, kitambo sana, those who actually it just used for the banks used to trade against banks. You know, I'm going to explain the existence of leverage. Banks used to trade against banks, and when you talk about the banks actually trading against banks, central banks, and all those banks, you understand that there's a huge amount of money that is needed over here for you to trade over here at the forex market. Okay, so but as the time goes, it just involved something that we call the hedge fund. You know, hedge fund involved. So the hedge fund just came into the market. So hedge funds over here means that this is where people can just accumulate their money. So many people can just, this is investors, they come and they put their money over here, and then just putting their money into a pool, and then they can just maybe employ some serious or maybe big traders over here to trade for them. So this is a trading firm. So when these people get this amount of money, maybe they just trade. So that is what they are called the hedge fund. So they will just be trading for all those people. So you can see the banks who are trading against banks, but now the hedge fund just came in, and now we came up to the local banks where they can trade, the local banks and get involved. Until now, where we can just, my point is over here is until the market came to retail. So we are retail, so we have also investors. Retail means this is where the platform like FXPesa can just provide you with something called leverage. So because you need a lot of money to trade in the forex market, but you know, the forex moves in a small amount of money. For example, let's say 0.0300. So you can see these digits are very small, and you cannot say that you just enter into the forex market maybe to buy this small amount of money over here. You know, you need a lot of money for you to make profit out of those digits. So that's why you need to get something. Maybe if you have $10, you can see you cannot maybe if this movement you buy for this is $1 over here, you're just making zeros of amount of money. But through the leverage over here, it will just be helping you to actually be making good amount of money over here. Okay, and something we call the lot size and all that. So you can see that is where the leverage just involved in, so that maybe this with the smallest amount of money, with the small amount of money, you can trade in a big position. You can handle big amount of money. So it's like the platform will just calculate your money and just help you. You'll be, of course you cannot see that money, but in real sense, the money, the leverage you place, the system will just be assuming now you are trading with that amount of money, and that's how the risk it is. The higher the risk, the big, it can just be an advantage. But if you have knowledge, just see that one. So that is what we call leverage. We'll just be explaining more as we proceed. Let's go to the last one, which is not the last one. On this one we're talking about the margin. Okay, and actually before even we just move to the margin, how do you calculate the leverage? So to calculate the leverage is just very easy. Just get the value, the total, get total value of open position, just get the total value of open position, then you divide by margin balance. Then you just keep getting what? The leverage. You just be getting the leverage that you have used over there. And then last not last. Okay, margin is our next topic over here. Margin So there's margin, the margin percentage. I'll just be explaining when we come to MT4. You understand very clearly. But these are the terms maybe that you'll be hearing people talking about. So the margin over here just involve, this is the deposit required to open or maintain a position. When you place a trend, for example, you have a running trend of Euro USD, so you need a certain amount of money to open that position. You need amount of money to place that trade. So that is what we call the margin, okay, or to maintain a position. If the margin is very low, that means the platform will close your position automatically. That means your account will be blown, okay. So you need a certain amount of money. Margin, you know, margin it means something inside here, so the amount of money needed, so that is what we call margin is needed. And the last one we talk about over here, of course, we come to others, but we are talking about the spread. Okay, spread, actually this is the difference between the quote price and that is the bid and ask price. Okay, so you have seen maybe the platform talking about, maybe that is a Euro USD, talking about, I'm using this value, let me use this value, allow me to use it again and again. So we have 0.3000, and maybe you have seen this price, another price written over here. So these different two prices over here, so you have seen maybe when you are going to trend, the one is here and the one is here. So this one is what we call the difference between the buy quote and the sell quote. Okay, so those are the difference. That means if you subtract between this and this, you get 22 points. Okay, so this 22 points are the one that you have to pay when you place a trade. Okay, so for example, let's say you buy. Okay, when you buy in this market, the market will start from here instead of here, so it will pick from here, but the market will just pick from here, but it takes this one, so you have to pay 22 points. You just understand that. So you have to, if you just calculate the difference over here, you just get 22 points over here. So those are what we call the spread. So the other than that we just be talking about over here is the major currencies that are trending in forex trading. So these are the major currencies that are trending in the forex market. Trending in the forex market. Number one, we have euro. We have euro denoted as euro. So this is a European currency. We have JPY. We have so many of them. This is Japanese yen. Japanese. There's something that making me to write them down so that you can just understand. We have GBP. This is British pound. We have something like CAD, that is Canadian dollar. Maybe you know those things, you can just go through all them. We have NZD. This is New Zealand. This is New Zealand dollar, and many of them. This is CHF. This is Swiss franc. Okay, I know the way it's just written, maybe it does not sound that way. So we have these pairs and how they are just named. So these pairs actually are named, and maybe you'll be hearing those pairs named that way. So we have these pairs. So these are pairs and the nicknames pairs. So we have a pair just like this, written this way. We have this pair. This is known as euro. This pair, if someone tell you, hey, what are you trading? I trade euro. Okay, so he is trading euro USD, because actually, yeah, so that's in strategy. If someone trades something like USD JPY, that person is saying I trade dollar yen. Okay, I trade dollar yen. So that is the language of the forex. I trade dollar yen. Okay, all right. So if someone actually trained GBP USD, that person will just say, I trade cable, or I trade sterling. So it means he's trading GBP USD. So if someone actually trades that is New Zealand dollar, that is NZD, and then versus USD, that person will be saying, I trade Kiwi. Hey, I do handle this one. So that is the Kiwi. Okay, so if someone trade maybe US dollar versus Swiss franc, that person will say he trade was guess he trade Swiss. Okay, he trade Swiss. So those are the terms maybe you can just be hearing in the forex market, and it just sounds amazing. So talking about pairs, name of the pairs. Okay, name of pair. How naming of the pair happens? Actually, this is naming of pairs. Okay, so for example, we have Euro USD here, we have Euro USD. You'll see something written like this, and maybe the value over here. I'm going now to explain this the last time so that you can just get these things clearly now. Okay, so we have dot here and 0300. Okay, now let's talk about this one. So this one is the base currency. It is base because actually you can see it is on the base, it is on the bottom, it is on the first one. So this is the base, the start, and this is the quote. Why are we calling it quote? Because if you just want to buy the euro, you quote, you say want to buy in terms of dollar, you buy with $2, $1, 1.0, so that is the quote currency. So this is the quote, this is the base currency, and this is exchange rate. Okay, you know this, we talked about it, exchange rate. So this is very, very important. This value is always 1. Okay, so as we said, remember what we said earlier, we said you need $1.0300 to buy 1 euro. So the base currency is always 1. So you need 1.00300 to buy 1 euro. That means the euro is expensive, because 1 euro, if you have 1 euro, you have $1.0300. So when you are buying, you are doing what? You are buying, you are buying euro. Okay, when you are selling, you are doing what? You are selling USD. Okay, so it's just like inverse of that. So if you buy, you are buying euro. If you sell, you are selling USD. So that's how easy things are actually in the forex market. So in the next video, we'll just be talking about the long and short, that is buying and selling. You just understand more about them, and also how to calculate point, how to calculate loss before you enter into the market. So that has been the part 3 of this video. We'll be coming with part 4 so that you can just understand everything about the forex trading, and this is going to be very, very easy. If you love this video, make sure that you subscribe down over there, and also like this video, share to your friends. It will just be very amazing. If you just want to know the broker I use, click the link in the description below to join FX Special, follow instructions. And if you just need more guidance, WhatsApp me, my number is down one over there. I'll see you in the next one. Hello traders, how are you doing? This is Dan, and this is Dan Tech Channel. In this video, we're just going to be going through the technical analysis class, and on this class we are going to be talking a lot, and make sure that you stay tuned, because this is the introduction to the technical analysis, how you can just execute and good analysis, how you can just utilize them to know where you actually even going to enter accurately. So if you are a beginner on the forex trading and you just want to learn more about technical analysis in the language you can just understand, because I'm going to simplify this in a very, very, very simple way. Of course, course, I will be having an assignment for you, and I will be offering you a place to ask questions, so that maybe if you be having question, will just be coming over here to explain that. But everything I'm going to be giving you over here, then you're just going to love it. We'll also be going through some indicators to see how you can just use them to implement them on the market and enter very well. Okay, so let's talk about the technical analysis, or you can just call it technical analysis. I'm just nataka tu kuandika so that at least my hands is so kuandika. This class is going to be master class for this maybe 1 hour and all that. On this technical analysis side, we can call it TA, that is maybe TA, we call it technical analysis. And when you just call, there's something we call also fundamental analysis, that is fundamental analysis. We'll be coming with another class where we'll be talking about the fundamental analysis. When you are starting on the forex, let me just brief this for the beginners. When you just want to place your trend, when you just actually want to trend very well, you have to combine these three things. Okay. We have, when you just want, you can combine between technical analysis plus fundamental analysis if you just want actually to be a very profitable trader. And this is not must, but actually you can even include intermarket analysis, maybe that is sentiment. Actually, technical analysis will even give us sentiment. Let me just explain this. Technical analysis, this involve that is studying of the graphs, and what you are going to see right over here, I'm going to define that. But actually, when you just go to the trending view over here, this is the site where you draw your things and all that, to maybe know where you are going to enter and all that. Let me just brief. I've not already entered into the technical analysis. I'm just bringing you this, just an overview. On the fundamental analysis, right over here, we just be talking about news, how the news affect the market. And if you just want to know how the market news affect the market on the fundamental analysis, you just go to the technical analysis to see the effect. Sentiment is about the feeling, the data of the market and all that. But in today's class, we'll not be talking about all these things. Easy is a bandai, but today we are concentrating on the technical analysis. Now, what is technical analysis? Technical analysis, actually, this analysis came all the way right from 1980s huko, yeah. Not even 2000, not even 1990 something. It's 18,000 over there. That is a long story. Now, what is a technical analysis actually? And the chart you always see about the candlesticks. Assume now you go to the market to buy the price of unga. Actually, here in Kenya and many countries, maybe you just went to the supermarket or anywhere, but today, maybe assume now you are doing this daily. Today you buy the price of unga and it was at this price. Tomorrow you go, you see the price imeenda juu kidogo. The other day the price will be here. Maybe the other day the price will be same here. The other day will be here. The other day you are recording this one maybe in 1 year period. In 1 year period, and you see something dropping like this, and that is why. So if you just connect this line here, what you see, it will draw something according to that graph. Now, what technical analysis does is that you will say that data repeat itself, something that is against the books, but actually history repeat itself, not even the same. You know, we cannot say that history was here. Of course, it can be here, but actually, if you can just see this one, we can see it is trending. That means the price has been increasing with time. Now, on the technical analysis, this is what you analyze to know on the chart, to know what is happening in the market and all that. So that is what we call technical analysis. You study this group to know, first of all, number one, you study to know the history of the market. You can know the history of the market. It can just help you to get the ranges, you know, where the price is ranging, something like that. It can help you actually to know whether the market is in bear or bull. Bear means the price is dropping just like this, to know whether the price this year has been dropping. Bull, it means whether the price this year is going up and all that. And maybe whether you just want to buy, you can keep up with the that is with the momentum. And T also, this price can just help you to know what is the reaction of the fundamental analysis. Assume now there's news that have been released about the interest rate and all that. What are they bringing to the fundamental analysis in a letter, and what is the effect? A technical analysis is the one that will just show you that. And actually, kama kuna fears, maybe when there is war in China, there's war in Ukraine, you see that on the technical analysis, because you see some people and maybe high volatility happening at that time, and that's why you know that this is sentiment and this is what you expect anytime you hear that. Okay, so that is why you see all those things that will just be helping you so much to know that. Now, for you actually to place a very profitable trend, I say combine technical analysis for the first time and actually be knowing what is happening on the fundamental side, so that you cannot be outside. So the reason I'm saying you have to combine at least this one, this will improve your profitability. Itaongezea profitability ile utapata Jesus. It will just increase your profitability. That's the name I know. Okay, now we are here. Now you have known what is the introduction, what is technical analysis and all that. Actually, do you know, let me just draw this as I was saying. Do you know this? Let's put this 10%, 20%, and then we put this 70%. This, do you know, actually when you are just trading is not all about technical analysis. Technical analysis actually is very nice, but do you know that you only get 10% for you to be profitable when you are trading on technical analysis? Only 10%. 20% actually, this is how you manage your money, how risk management. How do you actually manage your money when you are trading? How do you push yourself to the market? Maybe are you using the high lot size? Are you exposing to amount of money and all that? After doing good technical analysis, you know how to manage your money. Then actually you will just become at least 40-30% profitable in the trading. The other thing that you just have to know, what carries 70% is not, this is psychology. Thank you for knowing that. Kama umengezi hiyo. So this is psychology. Psychology is actually very important when it comes to trading. Kwa nini tunaongea let me just, because it is 70% high, let me just talk about it. Now, when you talk about psychology, you know, psychology is very important when you are trading. Sometimes maybe you can just buy, you can just do your technical analysis, very nice, and maybe you identify there are some trend, there's something maybe that has been happening, a lot of indicators, and you are very right about that. But you know, if you are not fit in psychologically, akili yako maybe there's something, there's problem. There's problem here, there's problem. That man has seen problem, gonna shinda in this mind. So if there's problem here, do you know, the moment actually maybe, let's say this guy, the account is only, let's say maybe the smallest, let's say even $100, okay? The moment actually after entering the market and indeed a very good analysis and all that, the moment you see that he is negative $2, what he do, he only runs to close the market. Why? Because he is just, or maybe he lacks, is not patient. But the moment you close this one, you realize that the market is going to your favor now, according to your analysis, and then the market closes at the right time. So what triggered you to do? You end good analysis right over here, which is 10%. You end maybe good risk, but the psychology kills everything. If you have good psychology, actually, you are going to make it very nicely, very nicely. But if you combine, let's say again, if you combine technical analysis, first of all, let's start here. Do go and check whether there is fundamental news, because they're going to affect the market very good. Combine with the technical analysis, and then know how to risk management your money, know how to manage your money, and then be good in psychology. Then trust me not, trading will just be very easy for you. Okay, you have maybe, and how can you check whether there's something that is going on in the market? For example, let me just go over here. I'll show you. Like now it is 1:15 p.m. when I just go to the forex calendar, let me just go to the that is Forex Factory. That is the platform. You can just, I'm not talking, this is just a brief of the technical analysis or fundamental analysis. So if you just check on the fundamental calendar right over here, you can see 3 p.m. we have ECB presidential lagged speaking. For that we have an employment claim. So there are not a lot of things that I'm going to be mentioned over here, but these things actually they are going to affect market in one way or the other. But you can see from now to 2 hours, only the fundamental analysis will just be affecting the market, which means you can do your good technical analysis in the market is just going to go at your favor. But when these news are happening, you can maybe wait for the news and all that. Maybe when there is there are those news that have high impact, maybe you can just avoid that, or maybe you can know how to manage, or maybe enter at a very good place and all that. Now talking about that one, let's just proceed. That is what we call fundamental, unless we come to that later. But we are not interested in today in fundamental. We are not interested in risk management and not in psychology. What we are interested in today is about technical analysis, because what you do about the technical analysis, everything will just be fine. Okay, now when you come to technical analysis, actually we have advantages. We have advantages. I'll be coming to the chart, we do practicals. I'll be coming to the advantages of technical analysis. And this one, the technical analysis I said earlier, it can just help you to actually trace I'm going to entry, because this is where I'm going to enter into this place, because this market has just been moving up, this market has been moving all this way, and now I know I have then going to enter here. After doing your analysis, then you just know I'm going to enter a place like this here. Okay, I'm going to enter a place like here. Okay, and then you put your order. Okay, you can now enter into the market. So number two, what a technical analysis can help you is easy to analyze. When you are, it is very easy to analyze. That's why so many traders actually they know how to analyze the market. It's good. The more people use technical analysis, the more the market is obeys TA. The more people use technical analysis, the more the market obeys the technical analysis, right? And the other thing is that this can be applied everywhere. Actually, the technical analysis, whether you are trading stocks, whether you are trading commodities, you can apply this everywhere. Actually, everything that has advantage has disadvantage. The reason this is, if you can actually depend only on TA, then you are going to occur a lot of losses. You cannot depend on this, and you have to combine everything that I've been talking in this video. So if you just do even wrong analysis, then losses. But make sure actually you do your analysis maybe on the demo account and learn it, and it will just be very amazing. What I advise on technical analysis before we dive into indicators and all that, make sure that when you are just using the indicators, let me write this one in capital letters. Note, when you develop your technical analysis, make sure you use it more times. Make sure you fall in love with it. The more you fall in love with it, you become expert with it. Don't use so many indicators and what. Use it more oftenly. Become an expert in it, so that maybe when you use that, you are good in that. You are good in that, and the moment you just become good in that, there's no moment. The reason when you just become good in that, you just be knowing when the market shows the wrong indicator. when it just show you the wrong entry, you know, this guy is just a gold digger, it's just trying. You realize I'm going to digger somewhere, and you know this signal is just trying to trick me, and now I'm not going to enter because it's just tricking you. That's why it's very important for you to know the right end. Therefore, in love with one of the technical analysis, you analyze well, that is, you go do it again and again and again. Okay, now there's what we call indicators. Now let's go about the indicators. For you now to trade forex, you need things. This is what we'll just be talking about over here. Forex trading in technical analysis, we'll be talking about volumes. This is what we call technical analysis. We'll be talking about that is technical instrument. And we'll be talking about indicators. So this is what we'll be talking in this video, and it will just be very amazing. The moment you just know 3 of these things, then you just be done with the technical analysis. Now let's start with the volume. Now when we just talk about the volume right over here, let me just name this one so that they can just be very easy. So we name this 1, 2, and then we name this as number 3. Now when we talk about number 1 and we talk about the volume, this is very easy. So we'll be finishing with indicators because this is where we have a lot of things to talk about. Now when we talk about the volume, actually this is where we talk about the number of it's just like how can we say it, that the amount of money that is maybe traded in the market. The higher the amount of money that is traded in the market, the higher. This is actually what we call the liquidity. The liquidity means this is where the money is maybe producing the places to buy and places even to sell. You know, when the people are selling, too many people are selling and other ones are buying, you know, you always produce the place where you can just give you an opportunity to buy and sell. Actually, the last to check, 6.6 trillion was traded in the forex market every day. 6 point. Actually, this is more than budget of Kenya in 1 year. So there's a lot of money that is traded in the forex market. So this is a place where you can just invest your money and become good. To know so when you're just doing your technical analysis, you can go to check whether how much of volume is being traded maybe in that day, so that you can just know whether this day you just be having an opportunity to enter the market or not. For example, let's say you come to over here. This is the chart. I'll be explaining this in technical instrument. When you come to the indicators over here, it is one of the indicators. Actually, you can come over here and then you just type volume. When you type even volume over here, volume, net volume, you see, like net volume over here, it will just be showing you the amount that is being traded at that moment. And the higher the volume, you can see where it is changing here. Okay, net volume and all that. So when the volume actually is high, you always see the market actually going up and down. So the moment, for example, you can see this one, the volatility was very here, and you can see the graph is up here. The graph is up here because you can see there was high volatility here. What about when the market actually is on sideways and there's nothing that is just happening? Like here, you can see here, this is sideways, and you can see there was very less volatility, there was less net of volume. That's what trending over here. You can see down one over here and here. So the higher the volume that is trending, just like here and here, so you can see the higher the volume, and when the market just went down over here, so you can see that the volume actually is almost directly proportional to the volatility and the market. So you can see it is directly proportional to the that is volatility of the market. And the higher the volume, the more maybe we expect maybe that is maybe more of it inakuanga bull. Yeah, so when the market is high and all that volatility, when volatility, you can just detect it when we have long line, maybe we're long candlesticks right over here in the shortest time. That is when you can just know that the volume is actually trending is big most of the time. And also the buyers also can be sometimes. So volume, you can master that on the volume side, and you just be in a very good place to know your entries and to spot your places of entries and all that. Okay. The next thing that you have to know, number 2, is the technical instrument. You know, it is, I don't know why I couldn't start anything without talking about the technical instrument. Technical instrument, in this side we are talking about the use of these materials, just like the trending view. If you have FX Pesa, we have FX Pesa Trader. Kama uko na MT4, unatumianga MT4 pale like to do this analysis. You see, like all this instrument that on this side, maybe I can just zoom so that you can see, like all this instrument you see on the left side over here, like these these are for technical instrument. I call them technical instrument. Why do I call them technical instrument? Is because they are instrument that can just help you to draw. When you long press this, you can see it help you to draw like trend line arrows to know where the direction. You can see here I've not used any indicator, but I've just used technical instrument to draw, and I can just know even the market maybe is just going to move where and where out of that. And that is the work of technical instrument. Will just help you to draw 1, 2, 3 in the market to know maybe where the market may end next, all that. And that sounds very, very, very amazing, and is just very interesting to know that. So I made a video on how to use the trending view, everything that you see over here. I will leave the comment in the section so that you can just know how to use all these instruments to draw a perfect line there, so that you can just identify good places of trending. Now when you talk about technical analysis, actually that is what you analyze using those technical instruments. You just have to learn about that. And number 3, which is very interesting actually when it comes to technical analysis, which is indicators. Indicators, actually these are the most people use. Actually so many people use indicators, and actually you can just be asking yourself, indicators. There are some theories, you know, people asking me, where can I get an indicator that actually is 98% profitable, indicator that is 30% profitable, indicator that is 100% profitable? You never get these kinds of indicator maybe you are looking for. Okay, there's no indicator that is actually 100% accurate. There's no indicator maybe that is okay. There are some indicators that are very simple to learn, and maybe they'll just help you get a chance of entry and all that, but there's no indicator that is just going to give you a highest signal maybe of entry to know where you're just going to enter market maybe and get more profit of that. Those are just the theories, hizo ni vitu maybe asieleweki and all that. So make sure that's the theories that you just know about the indicator. So there's no indicator that is perfect and all that. Now I'm going to talk about something which is very important here about the technique, about the indicators. Make sure now that listen to this about the indicators. Okay, when we talk about the indicators, I'm going to be talking about, so let me even write this, indicators here. So we are going to be talking about the indicators. This is where everything lies. So I will not teach you how to use MT trending view, MT4 to do technical analysis. That is draw technical instrument. You can just learn. I've called them technical instrument to draw and all that. We will just be using 1, 2, 3 of them. Maybe they'll just give you an overview, but if you just want, you can see there are many of them. You can learn them. I will leave the link in the video so that you can just, if you know how to use MT4, if you know how to use the trending view, then you just be knowing how to use those technical instrument. But on the indicators, actually this is different, because let me show you something over here. When we talk about the indicators, we are talking different and very big topic over here. This is the reason. When I talk about the technical indicators, I'm talking the indicators can be clarified into 4 things here. When we talk about technical indicators, yes, tuko kwa indicators. Number 3, indicators. Here we have indicators that are trends, okay. We have oscillators. These are indicators that are named under oscillators, and we have the support and resistance that are on support and resistance, and we have oscillators, and we have indicators for price action. So this is what we be talking about right over here. And let's start with, because first of all, let me just identify this. I cannot talk brief on all that, but what I'm going to be talking about over here, I'm going to go to the details of each of them over here so that you can just know right over here. Now there's something that I actually write. The reason I started with a trend, I'll explain, and I finished with price action. I will just tell you that. Now for you actually to enter a perfect trend, enter a perfect trend so that you can just trend perfectly and become profitable, and make sure that if you have been losing on the forex market, try to apply this. Just try this, just try what I'm going to say here, and maybe you just give me a report. So before you enter a trend, check the trend of the market. When I'm talking about the trend, is this one. Let's talk about, this is where we say you first start. Let's see, what do you check? Tumesema you want to enter a perfect trend, start with the trend. What do you have to be looking at? What do you have to be looking at so that you can have that perfect trend on the trend? Let's look at the trend. When you come on the trend right over here, we are talking about there are some indicators that are under the trend. Actually, you can even use the instrument to identify the trend. You can technical instrument like lines. Let me show you. I'll be doing the practical so that you can see. Like this one, let's see, for example, when you see this market right over here, so I'm going to cancel once of these. So actually when you can, this is 4-hour time frame. I'll be explaining that also later, and with the time frame and all that. So when you come and draw, when you long press this one and take a trend line and draw a line touching one hand and another hand, at least 2 ends, and you can see it touching 3 ends. The more perfect your line is, the stronger the trend. Okay, try to connect this one. If they connect that one, just know that trend is very strong. And the moment you just do that, take another line, and maybe you can just draw to see whether you are going to get another perfect line here. If you just don't get it, don't force it, don't force issues. And you can see we are trying at least to have something here which is not bad, something like that. So on the upper side we have this line. This is the trend line. So you can see the market has been touching this line, and this line the market is just going up. The reason even you can see this line are moving just like horizontally, not horizontal but upward, just like this, ascending. So this is what we call an uptrend. The word sentence of uptrend. Uptrend means the market is just moving up, but it's not moving. You know, the market cannot just move up like this vertically. The market has actually to go up this way, and retracing, and that is what you just have to know on that. So when we come over here to the trend over here, you can see already we have used the technical instrument to determine whether the market is on downtrend or under. When you come over here, you see that when you try maybe to connect 2 points over here, and you draw something just like this, you realize that this market is on downtrend over here. Even this is something that you actually realized first and very easy when you just enter into the market first of all. And actually you can even use this to know the market, because actually the market obeys the trend lines, the trend so much. Okay, so when you just draw something like this, you can see the market goes up, drop, touches this line, tries to go up, touches this line again, and goes up to touch this line again. So we have this is high, this is high, and this is high. So all this upside line here is acting as the resistance. So the resistance means, for the beginners, that is when something is trying to go up and it gets resistant, that is means that thing is up. There's something that is preventing you to go up, so that is acting as the resistance. If you are falling, like the market is trying to fall down over here, so this line is acting as the support, because it is supporting the market. And you can see the moment it touches here, it touches here again, the more the market actually becomes strong, because that time it touches over here is trying now to come right over here again and touch this area. So that sounds very interesting on that. So that's how you use technical instrument to identify the trend. The other way you can just use the technical instrument actually to identify the trend is using the indicator that you just get from there. This is how you use. So we have talked about the technical instrument. You can use, that is the moving average, that is EMA, or you can just call it MA, that is the moving average, exponential moving average. I will not be talking with more of them, but let me just talk about them most that are known, so that you can just know that. So when you just go to the chart right over here, and I'll just be deleting that many of these to avoid a lot of mess work here. Yes. So already the market, we have known the market is on trend, and okay, let's see. So when I just go to the indicators over here, I can just search what is called MA. You can just even write it over here. The more you learn this thing, the more you just understand them. Okay, so when I just go, I just be writing MA. You can go with this, there are different moving averages, and I can just click this. This is moving average over here. So you can see now I've loaded EMA on my chart. This is the EMA, this line, and but where I can just increase that is what we see. Let me just so that you input, I put it, I just want to have 50. You can have different length over that, so I'll be putting 100 EMA sorry, 100 EMA. And as you can see right over here, this is EMA on the confirmation side. So you can see moving up, it will always tell you when this line is moving down, we are in the downtrend, and when it's moving up, you can just identify the trend just like this. And actually when this line is also showing you the place, like this place, as you can see very well, it is just showing you that in this place you can see we end this trend line and we have this moving average acting as. So the moment you see the moving average is down, it is acting as the support. When it is up, it is acting as the resistance, just like here. So here is the resistance, but here is acting as the support. Okay, so that is what we call the moving average. One of the trend that you can just use. Of course, you can just use a lot of trends here, even if you search, because they are, I don't know whether it's thousands of trends that you can just find over here. Kuna, let's define them over here. When we talk about the moving average, we have dynamics, you know, we have dynamics, we have support, and resistance, of course, is just appearing here again. So number one, we saying that when you just want to identify, to enter the market, identify the trend. The reason you just identify the trend is so that you can just know whether you are going to trend towards the trend, or you are going to trend against, or we can just call this retracement, on the retracement side, or you are going to trend against the trend. Of course, you cannot trend against. If you trend against the trend, I don't want to call this one. If you trend against the trend, then these are going to be banned for you. But actually, when you trend on the retracement, things are going to be not that banned, but actually this is very risky. The reason is the retracement actually is just done short. It just happened short because retracements actually most of time in appearing half of the, it's just almost the half of the movement of the bull market. What we just understand that retracement actually is where the market move like it. Let me just give you an example. Because I say the market does not move straight, so you can see this retracement, uptrend, retracement, uptrend, retracement, uptrend, retracement. So this is uptrend, but you can decide to sell. Maybe you have the market comes over here and you sell here the market, so this you can just decide to retracement to enter into the retracement side. Of course, even the market can just, let me not talk only on the bull market, let me even talk about the bear market. So we just talk about the market is just going down over here, retraces back, goes down, retraces back, goes down, retraces back. So you can actually decide to buy over here and sell over here. You can actually, but you can see this distance is long, but this is almost the short. And that is, let me just go to the graph so that I can just show you that. So on uptrend that we have identified over here, you can see over here we have this movement up to this side, and the moment it touched this line, you can just decide to sell. But when you sell, you can take your profit over here because you can see the market retraced back. When you see something like let me show you again. So when you see something like this again, the market went up here and went down, touch this line. So this is what we call retracement, going up and retracing back to that point. So that is what you just have to know. Are you going to trend towards the trend, or are you going to trend again that is on the retracement, which goes a half? And of course the trend is long, but retracement actually goes a half, as I've said. So that sounds very interesting there. Now here on the trend right over here, actually there are different type of the trend over here, and let me just talk about them in brief form as we finish this side. Now on the trend over here, we can just talk about the trend. Here we just have different parts. As we finish this, we have like a major trend, we have intermediate trend. I hope you are writing this. And also we have minor. So when we talk about the major trend and minor and intermediate trend, here we are talking about a trend that actually can just last few months to years. Okay, when we talk about the intermediate trend, this is where it can just last between weeks and months. Okay, and when we talk about the minor one, that is one tack between even hours, or maybe we can just call it days to weeks. Okay, now one. So when you identifying your trend, just know the trend that you're just trending in. So actually the major trend is where is very strong. If you just identify a strong trend, just stick to that because it's just very interesting. And anytime maybe you are trending on the major trend, make sure that you want to identify a major trend, use a time frame, maybe one day time frame and all that, and we just see that type of the trend. On the trend over here, when you just talk about the trend, actually we are talking about the bull or the bear market. But actually, do you know that apart from bear and bull market, we have the place of distribution and we have the place of accumulation? So you just have to know this. Okay, anytime maybe you are doing this, let me just do so that I can just show you over here. So what we're talking about distribution and accumulation, assume the market are just moving like this and it is started moving this way. So before actually it just goes down, you see something like this and then just goes down. So when you just come and draw this line here, when you draw something like this here, you see there's accumulation over here. The place on this is accumulation over here. Of course, this what we call accumulation because it has accumulated here. It does not want to go up. So this is accumulation, and actually when you're trading, you can just identify maybe the breakout of that. Okay, and also we have the place of distribution. This happens after the long after bull. So this happens, we get distribution after, but assume this was a downtrend, so it means we get the distribution after downtrend, that is after bear market. So you can always identify whether you can see the place of accumulation, distribution. What happens over here is the market is trying to go sideways, but up down, up down, up down, up down, but it's the place of accumulation or distribution being the same. So that is what we talk about the trend and all that. The other thing I just want here, which is number 2, is we have been talking about the trend. And note, there's something that we are moving in together. When you just want to trade for the first time, make sure that you identify the trend. Number 2, let's talk about these indicators like oscillators. On the oscillators over here, we can just talk like RSI. We can talk like MACD. There's all these oscillators. We can talk about C high. So these are types of the oscillators that we're just looking over here. Let's talk about this RSI, one of the indicators right over here. And actually, when you talk about this RSI, that is relative strength index, you put it here. So what this shows you is actually just shows you the whether the market is just overbought. There are so much of them that you can just use whether the market is overbought. You can see actually it just appears down over here, okay, and it just shows you whether market is overbought and maybe just give you the place of entry and all that. As you can see right over here, after the market went to this place, you can see a place over here. And when they can zoom, you can see like on this place it was up here, so it went over here. Actually you cannot enter the market here, but the moment actually it touches this down again, you can enter a sell, because actually it tells you that already the price is already overbought. Now it's just going to retrace back. Here it was overbought, here it was oversold, and now even if you just check on the graph, that is on the candlesticks, you see equivalent to that. So you can see like here the market was here, and that is this place, and now it is just retracing back. Over here it was oversold right over here up to this place, and now starting that is going up and up again. So that is what we just normally see when it comes to RSI. That is one of the indicators that you can just use there over there to make your trading decision, and that is it. So when you talk about the resistance and the support, here we are talking about the market is resistance and support I just talk about. And this resistance and the support, remember, they can be vertical, they can be this way, this line acting as a support, resistance, this line acting as the support. You can even use the that is moving average to know the resistance and the support over there, as I said earlier, and that is it. We have to know about the resistance. On the indicators, you can use one of the resistance and the support that you can just use, of course, is the indicator that's known as SP, that is 5 point SPRR. So this will just show you the pivot point, will just show you the resistance, and I love this, so I just have to click it as the favorite. So I just load it, and what this shows you, this just shows you the place where the market is at and the support and the resistance of that. For example, you can see like this line, it tells you that this place was the previous support, so the market may be trying to come down to this point. If it reaches this point and goes below this support line, you can see this dot written here. It means that when it crosses this line, you have now to sell, okay? And when the market, you can see this blue line, when it crosses this line, this was the previous high. So if the market actually pick up, the market reached at this point, but you can see the moment it crossed that line, then green line tells you to buy. So the moment it crossed this point, those you bought, actually you can see the market proceeding to go high, and those proceeding to buy after this, actually they enjoyed some amount of that is bought support here above here, and it's just gone on that. So that is the indicator that you can just use to identify support and resistance. What do we learn over there? Let's continue. I said use trend. I'll just repeat this again until you just understand. Identify the trend of the market, and this point number 2, use at least 2 to 3 indicators. Use 2 to 3 indicators. Why are we using these 2 to 3 indicators? Let me show you. So this is our point. This is point we'll be driving up to the end so that you can just know what to end. I'll just give you the brief of it at the end of the video so that you can just know what you have to be doing to identify and go to price. This place has told us this was the resistance and support. I have confirmation that this is now I'm going to resistance and a support line. So we're using two and using the that is moving average. I have used the trend line, and I have also used the support and resistance point, that is the pivot point. So you can see I've used more than 3 indicators, and now the place is showing me as the support and resistance point. So I already know that very well. So maybe I can just wait the market to move up to this place, or maybe when it just tries it can just even go again to this support line, the previous high, which is this one. We'll draw this line over here, and when it crosses then and goes up, I will just buy again. Or maybe the market is just try to go up again, especially when it is crosses this blue line here again, but this blue line was for this point. So that is how you just use 2 more than indicators to confirm the market. The reason we are using more than 2 indicators actually is so that we can get the place known as the place of confluence. What is the place of confluence? A place of confluence is actually the place where you can prove more than 2 times. You get that proof. Assume mtu anakuja, someone just come to you and tell you, I have confirmed that someone maybe has gotten 1 million from somewhere. Hey, you say it's very impossible for this guy to get that amount of money. Then another guy comes and tell you, yes, it is true, this guy got 1 million from this somewhere. Then you start believing on that. Then another someone, the third person comes and tell you, yes, the person came and then he just the guy got 1 million maybe from somewhere. And what do? You now start believing, because now you have the place of confluence. You are now influenced, you are now convinced. Just you can say it's convinced. It can just come even from the word convinced. That means you got in the place of confluence. Imagine now getting the indicators, or then maybe this moving average, or this is that one in Guinea, something like that, and this one come over here, and then you just get this point. All indicators are indicating this point. What you do, you get the place of confluence over here, or you get convinced about the point, and this is where you just buy. That's why if you identify the trend, use more than 2 to 3 indicators so that you can get the place of the confluence. Okay, and then you just pay good to go, because if you use 1 indicator, actually it can just mislead you. Let you know what other indicators are saying. Don't use so much indicators that you cannot even approach or maybe read the candlesticks and all that. Okay, use those indicators. Remember where we are on the accelerators, we are on the support and resistance. Okay, the third one that we're just going to be talking about over here is what we call the price action. Price action actually is our last one, and this is what makes everything to be very interesting. So I'm going to open remember, let me just bring a brief of this so that you can just understand. We are talking about the indicators, and when we talk about the indicators, we talk about the trend, oscillators, support and resistance, and we're talking now about the price action. Before we reach to the indicators, remember what we are talking about. We are talking about 3 things that you can start on technical analysis. That is to learn the volume, you learn about technical instrument, and then you learn about the indicators. Volume, I said, is where you can learn amount of money that is trending. Technical instrument, you learn how different platform work so that you can draw loss line, technical instrument and all that. And now we are on the indicators. Remember that. Now talking about the indicators, price action, let's talk about the price action now. And before we now finish this is going to be our last part. Very interesting. So we are in price action. Okay, so we are in price action. So price action. So let's talk about the price action. So when we talk about the price action over here, we are talking about price action is actually, this is a technique that just allows a trader to read the market and make subjective trading decision based on the recent and actual price movement rather than relying solely on technical indicators. Okay, so you don't even depend more on technical indicators, but you can combine everything, maybe price action and all indicators, to get a good place. So actually this is where you check the market. I will just go say everything about the market, but even before we go that, let me just define this. On the price action actually can just be defined between the details. We can see the details of the market, and also you can show you the market condition. Okay, condition. What is the condition? Is this the market sick? Is the market healthy? And all that. Let's talk about the details. So let's talk about the details. So on the details, you can see when we talk about juice, we are talking about deep. What do you check in the deep? What deepness? Details. If someone just tells you that give me this story in details, you're telling you just give me this story in deep state. Deep state. Deep. That means give me everything. Let me just know. Yeah, so here we'll just be talking about the candlesticks. Okay, here we are talking maybe about the candlesticks. You have seen those candlesticks. So for the beginners, I will explain that in brief form. And over here we are talking about chart pattern. How the chart pattern is on the market condition. Over here we are talking about what is the trend, that is the condition of the market. And over here we are talking about mostly is maybe whether the market is accumulating, whether the market is consolidating. Is the market condition consolidating? Consolidating means the market is moving sideways without some buyers and sellers are in the same path. There are no decision that is made. So talking about the details over here in deep state, I say in candlesticks. For those who don't know the candlesticks are the ones that are formed. Let me just show you in the graph. And what you see over here, you see something dealing like candles that you buy on the store or on the shop when there is no. So you can see the candlesticks are here. So what you do about this candlestick right over here is that you can see like the ones over here. So every candlesticks actually represent the time I've selected over here, that is 4 hours. For every candlestick to be formed, it has to be formed within 4 hours. So if I select maybe 1 hour, every candlestick will just be formed in 1 hour. And actually things are going to change since there are many candlesticks. Where there was 4-hour candlesticks, now we have 4 of them, so that they can just form in 1 hour. So that's how things happen right over here. On talking about the candlesticks, right over here we have these candlesticks. Like this is the candlesticks. This is what we call wick. Understand this. This is what we call body. Okay, this is the body. I've seen some people calling it shallow, don't know, but this is the wick again. So that is the wick of the candle. So this is what we learn. In details, you'll be learning more about even the wicks that is be formed, and also the body, and also the upper wick. That is what we'll just be identifying to show you where the market is just going. On the chart pattern, this is a big topic, also the chart pattern and all that, how the pattern are just formed. Pattern, when you just hear the pattern, just know it's just more than one candlesticks that is just going to be shown over there, that can just show you the direction of the market. We have talked about the market condition, that is the trend. You know about the trend already. Accumulation and distribution, you know that already. And consolidating, you will just be talking about when you just be talking, at least when we'll be talking about one of the candlesticks that we're just going to be talking about over here in this video. Now there are some things that you have to know. For you actually have to repeat this point. How do you become profitable even before you come to price action tools and all that? What will make you profitable when you are just trading? Remember what I said. first of all, use trend 2 indicators at least, and also make sure that you use the other one that I'm going to show you, the last one. Okay, and the principles to increase the probability are here. Make sure that you enter into the place entry at the place of confluence. That will just increase your entry at confluence, okay, where you are convinced this is the point because you have used more than 2 indicators. Make sure that you use different, the reason I stayed, I highly remember me saying that make sure that you stick at least to your strategy. Ile strategy umetumia, make sure stick kwaya. If that's one, become good in that, be smart in that, so that you cannot be tricked. Even when it just shows you the wrong signal, this is wrong because you are an expert in that. Become expert in that, and now you become that one. So learn to differentiate between false and truth. So the moment you know the difference between truth, that is will be because you are an expert. Because you are an expert, you consider and this one. Now, talking about something else over here is the confirmation of entry. Apply strategies with the highest 5 time frame. I seen that all big traders have seen them be talking about trading in high time frame. That is high time frame. That is what you just have to know. High time frame with what big traders have heard them talking about, and also trend. And I also see the magic in high time frame. Actually, trend liquid market. I say the liquid market is the market that offers big opportunity for you to trade and all that. Okay, so you can trend along with the trend. That is important because actually retracement seems to be very risky or that. So if you trend alongside with the trend, it will just be benefiting to you more than ever. Now the other thing, you just have to know that it is simple and strategy, and follow it with discipline. So discipline will just be very important. Remember, you became an expert. Remember to be following those rules, and now you become disciplined in all those things, and you just be good in that. Okay, now the last thing that I'm going to talk about over here is the price action, and I'll be talking about the candlesticks, and then we just be ending that out of there. Okay, remember that you can just that is candlesticks patterns over here. Okay, so when we talk about the candlesticks over here, that is what we just be ending up, because this will be, don't want this to be that long. When you talk about the candlesticks, this is where you have to learn in details. Okay, we send in details, under details we send candlesticks. So candlesticks actually can show you in terms, can appear in terms of numbers, can appear in terms of numbers. We can learn candlesticks in terms of numbers, and also we can learn the candlesticks in terms of them showing us direction. Okay, now when you talk about the numbers over here, we are talking where you can identify maybe a single candlesticks, one candlesticks, or multiple of candlesticks to show you the direction and all that. Okay, so that is what, or triple and double, most of them they are double and triple and all that. When talking about direction here, we are talking about the candlesticks that shows us the continuation. Okay, and the other one that actually shows us the reversal. There are candlesticks that will show you the reversal. Maybe can be one, or can just be show you them that there is even the reversal of the market. What are the functions of the candlesticks? Actually, candlesticks will just give you the sentiment. Sentiments means when the candlesticks, you just, maybe the candlesticks, the price is rising so much, that is why you see that the candlesticks sentiment is just showing kama kuna fear. If there's fear happening somewhere, kama kuna fear, you see a lot of market becoming very volatile, maybe imepanda sana, or maybe watu they are the fear has been developed in Bitcoin. You see a lot of people selling Bitcoin, and you turn on Bitcoin price in and drop, and that we see there is something happening. That is sentiment over there. It will just show you the strength the strength, whether maybe the candlestick, the formation, the pattern, it just show you the strength. They will just show you the reversal, they will show you the retracement, they will show you angund entry. Angund what? Angund entry. Now we are here in the last part. We see, remember where we started. First of all, before you enter into the market, make sure that you check. This is what the process of every trader. Before you enter into the market, check what is happening in the news. do that technical analysis. The moment you just do that technical analysis, that is, now when talking about technical analysis here, we'll be talking about what do you have to check the trend, use at least 2 indicators or 3 indicators to get the place of confluence. Then after that, use what we call check the candlesticks, that is, use price action to get what? To get the details of good entry. This place will just provide you now with the good entry. I'll be repeating this again when I'll just be ending this video. That is the process you have to go through before you place a trade, and you thank me later. Okay, so when you talk about the candlesticks, I was shared already that that is the what will just show you. So talking about the candlestick, they will just show you confirmation, false signals. You have to know that they will just the body and the size of the colors will just be different. So talking about the candlesticks, actually this will just be very important because this is actually a big topic. So we'll not be talking more about it, but I just want to brief it so that I can just give you the full process of what you just have to go through on the candlesticks. So talking about the candlestick, let me just talk about number one of the candlesticks that is known more so much, which is doji. So when we talk about doji, this is a single candlesticks over here. Of course, there are other candlesticks like white soldier, like brown crowns. There are a lot of them, a lot of candles that you can actually use over here. So when we talk about the doji, let's talk about the doji. Maybe you understand this more. So when you talk about doji, there are 3 types of doji. That is, there are 3 types of doji candlesticks, and there's what we call this one, and there is this, and there is this. So what are the names of these candlesticks? This is a normal doji, this is called dragonfly, and this is called gravestone. Why are they called this? So as you can see, this is normal because the wick, how do you identify this? I don't want to need this because I'll just be making things worse. So as you can see, it does not have a bond, it just look like a plus. The wick, that is the upper side, and this almost looking the same, and the body, there's no body over there. When we talk about the dragonfly, on the top over here, it has very long tail over here, this wick over here, and down on tail, and as you can see, this end over here on the gravestone is up. So let me just define them so that you can understand. Then dragon is flying, then grave, you know, this is grave, this is grave because it's downward, and actually it is down. This is the grave, and this is dragon is flying Jew, this one, but this is the grave because it is just down. What are they identify? What is the work? So this actually shows the indecision of the buyers and sellers. So nobody knows where the market is going. So normally what normal doji shows is that the closing price and opening price actually is the same. Closing and opening is equal to opening. Okay, so closing and opening actually is almost the same. You can see the price trying to move that is up here, and when it trying to move up, but it just closed right at the center there. So when we talk about the dragonfly, actually this price is just formed right after the downtrend. So when the market has just been moving this way and downward here, you may notice we have this dragonfly. So this dragonfly over here, they appears after the downtrend. So after this downtrend, more you see maybe you have done your confirmation of that, and when you see after downtrend, you see the dragonfly, just know the market is just going to retrace back and go up. So what you can say about dragonfly, it appears right after it appears after bear, and then it is a sign of it is a sign of bull. Okay, I'll just be showing you that maybe on the chart. On the gravestone over here, maybe there's been a bull market. It is opposite of that. There's been a bull of market, and then at the end we see what we call the gravestone. That means grave, someone is going to be buried. What is going to be buried? The currency pair is going to die, and you see, boom, the market dies. So this is why you see the grave. When you see the gravestone, just know someone is going to die, which is currency, which is the base currency is going to die over here, and that is where it identifies signs of bear market. So that is the candlesticks you just have to confirm, and that's why we saying the whole process confirm with the price action is the last thing that you just do, so that you can just know what maybe as the time increases, maybe as the time as you learn more, you just know what to do after identifying that is the price action, because the price action is what will just give you a good entry. And before having you just enter, make sure that you reduce even the time frame. That will just give you exact point, because actually when you see this market over here, you cannot even know where the market is at this point currently, because you can see long, because this is 1 hour. If you reduce this time frame maybe to 15 to 5 minutes, and you see this one already, the market is on a bear, and you can just wait market, maybe you can see it is moving sideways, so you can maybe wait up to go up to this level, and then you can just enter your trend. So that is the tips that you just use. Get that that is doji, maybe the price action to show you the entry, and after getting the entry, but don't use short or small time frame to get a doji. Make sure that you use at least 4 hours to 2 hours, or you can just when you unaendelea out, you just understand this more to get a very good entry point. Yeah, so let's see whether we can see all those things here, Mandoji, Dragonfly, and also the normal doji over here. Yeah, let's see whether we can have one. Yeah, which can just show you see here. So you can see we have one which is not perfect right here, but as you can see, this one over here, this is the dragonfly, and actually it was formed. The market has been, look at this, the market actually went up this way, up to this place, and despite that the market has just been on bear, on buller. So we have the market just like this. You know, sometimes you cannot get it to be very perfect, but sometimes look here, before the market just went down, we formed this. Look at this. This is in gravestone. The moment it appeared over here, the market started going down, and you can see actually the moment it was formed here. The moment actually it was formed, the market started going down. The moment it was formed here, the market went very deep down. Huh? So that is the work of dragonfly. Normal doji, we just shows the market just moving sideways, and because we get it here, indecisiveness and all that. So most of the time you see where the market is just moving sideways. You can see like here they are being formed like almost similar and all that, but you can see this, they are long tails and hand, maybe they are very small, you can just not call them that, but you can see how they look like they are just formed over here. So it's not like there is percentage that you just get them, but most of the time if you see it, just know it's an advantage. It will just tell you that now is the time to enter. Like the one you can see over here, where you can see this is very long. Actually you can see this one is very long, and the market started going up trend. So you can just continue to learn more about the candlesticks and all that. So that was our class today. I hope you have learned something out of that. Covered everything about technical analysis. What I will not teach you actually is I've just touched everything, so make sure that you learn about the volume and all that. Talking about the summary, let me just talk about the summary where we started actually, so that you can just understand this in a brief form. So we started up here. I'm briefing this again. We started by talking about the technical and fundamental analysis, where I said that actually before you enter into doing technical analysis, make sure that you check the fundamental analysis. What is going to happen? Well, the news that is just being given, is it the news that is going to affect the market badly, so that you can just maybe get caution of that? And then after saying that one, I said and I explained all that. I taught you what is the technical analysis do to give history, get ranges, and also show the price action and the volatility and all that. I also said that market, when for you to become profitable, just be depend on technical analysis 10%, risk management 20%, and psychology 10%. This is what I just said. I said combine fundamental analysis, technical analysis, risk management, and psychology also. It will just be very important. What are the advantages of technical analysis? I saying that it will just give you good entry, easy analyze. You can apply it to the market, stock, commodities, and all that. Disadvantage is that you cannot use only technical analysis, and also maybe if you just do it wrong, things are going to become bad for you. Just take the note that more time level, if you just become an expert in technical analysis, it will just be good for you. Wrong indicators, you just be able to know that. So I said on technical side, we'll be learning more about the volume. Volume is amount of money that is trending in the market, and just very helpful, good. And technical instrument, you know how to use the lights, those drawings, things on trending view, MT4, FX Pesa Trader, and all that. I said about the indicators. This is where we talk about a lot of things. On technical indicators, we talked about that. We said that indicators right over here and different clarifying over here, and that is we have the trend, oscillator, support and resistance, and the price action. On the trend, we talked about that is instrument you can use to draw the trend. You can use moving average, dynamic, support and resistance. On the trend, we're saying that you can either trend when the market is going towards the market, or on the retracement. We say retracement most of time is a half or maybe less than that, and we say that on the trend can be major, intermediate, minor, and few months, years in the major and all that. Remember that. To do that, market can be bear. You remember the accumulation point that I drew over here. Kuna accumulation na kuna distribution point. On the oscillators, I think kuna RSI, where you can just determine where to enter into the market and all that. I think that on the other one we talk about is the support and resistance. I think you can use like SPR, support and resistance, even the line. Price action, we went to combat that dip, which was our last one, and I said on the price action right over here, this is what talk in details, market conditions. And I said candlesticks, I talked about the candlesticks market condition. You know that is maybe whether the market is going this way. And actually on the market condition, this is where you see consolidation, and that way we see that when you see doji, normal doji, that is where you know market is consolidating. And entry, there we just saying entry point to note, and at the place of confluence. Know the difference. When you become an expert, you know difference between fake and good one. Enter when the margin is high. On the candlesticks, we say that the candlesticks appear in terms of numbers, direction, and also for reversals. I think before you enter trade, remember to do fundamental analysis, technical analysis, identify the trend, and also use the candlesticks, that is price action, on the last before you enter. We talk example of the candlesticks, which is doji. Identify a normal doji, dragonfly, and gravestone. I say terminology show the indecisiveness of the buyers and seller, because the market shows that condition is that the market is in consolidation, and I say that dragonfly signifies the market just going to reverse on a bull, the bull signs of a bull, and gravestone is a sign of bear. See you next time. Bye bye.